Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, looking at the biotech sector, XIB and IBB, and then we'll check in on some individual names, CLVS and SRPT. So the biotech sector has showed some pretty significant moves the past 2 days compared to what the market is doing. The biotech sector was extremely strong while the market was extremely weak on Thursday. That definitely stands out, and we had a clear tightening pattern where we had our low, the high of the bounce, higher low, lower high, and then we broke to a higher high, breaking the range of the past 5 days for the bulls. We could not get over the middle Bollinger Band resistance of 68.54. That is the fourth rejection that we've had from this level. If the bulls can get over it, they are going to be looking to shift the momentum back to their favor, but very clearly that is the resistance level to be watching, and that's going to drop down into the 68.40s to start next week. So a very impressive day by the bulls, holding up when the market was weak. We're looking for a bullish MACD cross here. The 50-day moving average resistance, which previously acted as support, is also on watch. That's up at 68.79. So the bulls have some decent momentum. If we see the market bounce, that should only help the biotech bulls. The weekly time frame here is an inside bar with the range fitting completely within the range of the previous week. It's a bullish reversal candlestick. We're holding the middle Bollinger Band support, but we need to confirm this bullish reversal candlestick with another green week this coming week to be looking back up towards our recent highs. IBB, a little bit different, but same scenario with the middle Bollinger Band resistance being the level the bulls have to get over. 290.97, rejecting from that level with an upper wick, and we are pulling back just a bit. We still had a fairly strong close. We have not broken out of the daily pattern here yet, so that high was 292.29, and we formed a lower high on Thursday with the inability to get over it. So XBI is one step ahead of the game because it has already broken that high to a little higher high that has formed, where IBB is a little bit weaker. And we've been watching and comparing these two sectors, well, the same sector on two different markets, NASDAQ for IBB and the S&P 500 for XBI. And XBI has continuously been stronger, not entirely significantly, but it is notably stronger over the past year. So the weekly time frame for IBB is a bullish reversal doji, and we did break the low the previous week, so it's not an inside bar here as it is on XBI. The key 100-week resistance is 299.32 that has rejected the bulls the past couple of attempts, and we will be approaching that level if the bulls can confirm this bullish reversal doji with a nice green week coming up. Individual name CLVS, big bullish reversal candlestick, but we have a double top. 57.68 was the high back on Monday, and 57.63 the high of Thursday. Still rejecting from the exponential resistances, but there was some solid bull volume behind this candlestick, obviously some really nice price action. So the bulls will be looking to form some higher lows and higher highs from here, trying to turn around the short term after a very big pullback. The red flag for the bulls occurred when 64.34 broke, because we then had a lower high and a lower low, and the bears really ran with it on increasing bear volume. Weekly time frame is still holding the 200-week and the middle Bollinger Band, 53.87 and 55.72. So it is a little bullish reversal candlestick on the weekly, and we need to confirm it, but we will anticipate that a lower high is going to form on this weekly time frame on any bounce compared to our recent high, and that is because we broke that low of 56.56, and we are now seeing a lower low, so we'll look for a lower high to form on any bounce if we do get some momentum to the upside. SRPT, I'm not really watching the daily chart on SRPT. I poke in and take a look at it, but I'm interested in this weekly chart. Look how tight we're getting. After a huge breakout, we've been pulling back for months and months and months. We had a bounce attempt off all of these moving average supports, pulled back, Same level, bounced again, a lower high, and here we are bouncing again, and it's a support band building a base. It's a descending triangle pattern where you have a horizontal base of support and lower highs as the range gets tighter and tighter. The bulls are looking for a break of 34.85 to make a significant move on the weekly time frame. We can see that we have tightening Bollinger Bands, and it's a bullish reversal candlestick this week. We must follow through with another green week. This coming week, we're on the verge of a bullish MACD cross, so we're close to this pattern potentially breaking to favor the bulls, or it's also entirely possible that we see a bounce play out and we form yet another lower high compared to 34.85. We could still see a 10% move and still be seeing a lower high. So if we do see another lower high, continue to stay in this tightening range, it'll definitely be worth watching, because when the break does occur, there should see a nice spike in volatility and volume and trading opportunity, but that might not happen for another month or two. So definitely worth keeping an eye on SRPT and this tightening pattern, and we'll be looking for a break, and we'll certainly report back when that break comes. So checking in on XBI, the daily chart for LABU, the 3x leveraged ETF to play XBI, is pretty much the same thing, but I don't look at the moving averages on LABU because it is a leveraged ETF. The time decay throws off those moving averages, in my opinion. So I would be making plays based on XBI and its middle Bollinger Band, and then playing LABU based off of that. So I appreciate you watching. I hope you have a great rest of your weekend, and we will see you soon.